Good morning, everyone. My name is Eugene Nicandri. I'm chairman of the Joint Authority and Canal Corporation Audit Committee. I'd like to welcome members, Chairman Canal. Let's see.
B. Gonzalez is with us, the three of us today.
Three of us. I'd like to welcome NYPA staff members who are participating either in person or by video. This is a scheduled committee meeting which has been duly noticed as required by the open meetings law. I call the regular meeting to order. First item on the agenda is the adoption of the proposed agenda that's been circulated to the committee members. If any member has an amendment or a change, please make a motion. If not, I'd entertain a motion to approve the agenda.
So moved.
Second. All in favor signify by.
I got her a second from B.
Yeah.
Aye.
Aye.
Next item is this portion of the meeting will be in executive session. The meeting will resume an open session in approximately an hour. I'd ask for a motion to conduct an executive session to discuss the financial and credit history of a particular corporation under 105F of the Public Officers Law of the State of New York.
So moved.
So second.
Moved and seconded. All in favor signify by saying aye. Aye.
Aye.
Motion carried.
Aye.
We are going to executive session. Glenn? Morning, everyone.
Mr. Chairman, I move to resume the meeting in open session.
Is there a second?
Second.
Second.
All in favor signify by saying aye.
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 Carries. We're back in live session. I'd like to state that there were no votes taken while we were in executive session. The next item on the agenda is the discussion agenda, and for that, I'd recognize Adam Barsky.
Open session.
Second.
Second.
All in favor?
Good morning, trustees, and
Well, we want to listen to ourselves once. So
right.
Right.
alone on a 30-second delay. Are we good with
Aye.
all of that?
I believe so. Go ahead, Adam.
Okay. Thank you, Judge. Good morning, trustees, NYPA staff, and members of the public. Presenting the final audited numbers for 2021, and as reported in the last meeting, we ended the year with a net income of $72 million, ahead of our target or budget by $31 million. No change as a result of the audit to the numbers that were previously communicated with the board. EBITDA actually did better in terms of $491 million versus $428, so $63 million improvement there. Difference being the increase in depreciation, non-cash items. So from an EBITDA standpoint, we actually did better on this as far as the income statement goes. If you go to the next page, also comparing 21 to 20's actuals, significantly better there by $89 million. Recall last year there was $17 million loss, and as well a significant improvement, $126 million in our EBITDA. Next page. From a balance sheet standpoint, balance sheet remains very strong with robust liquidity and meeting or exceeding all of our debt metrics, which we use to maintain our AA ratings. As far as any of the other ratios, all very healthy. Again, ample liquidity and sufficient funds to continue to manage and fund our capital programs as well as our other business operations. If there's any questions on that, only changes again reduction liabilities associated with the OPEB change, which we'll talk about later in the meeting. As you've been well aware that, by the changes we've made to OPEB, whether it be the integration of the canals or the Medicare Advantage, both resulted in a decrease in the liabilities, further strengthening the balance sheet. No other questions? Go to the next page. And again, just some variance analysis, I think, without having to go into detail here, but just the high points remain the same, that revenues did better because of increased or improved energy pricing on our portfolio, somewhat offset by increased O&M expenses and higher depreciation, but again, lowered expenses from the impact of the OPEB integration and the Medicare Advantage. And again, slightly lower investment income given the low rate environment that we were in. So investment income was lower than originally forecast by $9 million. Next page. Again, just to summarize, total assets increased $341 million. Liabilities decreased $269 million. Important to note here, the bottom, just an update on a couple things here. We did receive the payment of $43 million during the year for the state's payment for the temporary asset transfer. Right now, as based on the original $318 million that was transferred, only $43 million remains to be paid this year, and then they will be fully paid off on that transfer. Also, that we had fully accrued for the voluntary contribution to the state, which will be $17.5 million. Next. And again, just statements of cash flow, nothing unusual or to point out other than what we've already spoken about. And I think that concludes it. So I'm opening up to any other questions anybody has about the financials, but the main point is stronger results on the income side, stronger balance sheet. Everything is looking in the right direction. No significant changes as a result of the audit. So we seem to be in very good shape.
Anybody have any questions of Adam?
No, it's great news. I'm glad. Kudos to you and the team for navigating the year and the audit process. So well done. Always happy to hear. There's
Appreciate
no
everybody's
new
staff,
news.
Sandeep and his team, and everybody else in management. So everybody's working together to get information timely to the auditors to make sure that the process happened as smooth as possible.
Great.
Adam, I've got one concern about the presentation, and that's the $17.5 million transfer to the state. I've been on the board long enough to recall that the canals were transferred to the Power Authority, and there was approximately a $90 million hole that accompanied the transfer to the state. The revenues of the canals was about $2.5 million, and expenses were about $90 million. That's 5 years ago or so. And trade-off was, at the time, as I was led to believe, was that further transfers to the state would be held in abeyance as a result of that. The truth is that there's not just a $90 million hole, there's more like a $130 million hole that we've been trying to fill for the last 4+ years. My take is the state should be transferring to the Power Authority about 3 times that $17.5 million, as part of keeping the canals viable as a state entity. And I'm not excited about going back to transferring $17.5 million to the state treasury when we've got all of these projects in our pipeline that are going to require cash and unexpected contingencies and things like that. So, when that proposal comes up, I'm not inclined to vote in favor of it. And I'm just sharing that with you at this stage because I don't think it's in the best interest of the power authority, but that's my take on that.
You want to give a little more?
Sure, we don't, I don't
background? I
just,
think
yeah,
We'll pick it back up in finance, I
Yes,
think.
yeah, yeah,
It's a discussion for finance, but
yes. Yeah,
you know,
yeah, I mean, just in short, I don't think anybody disagrees with you, Judge, and this has been a continuation since the transfer of the canals, and it's also been an ongoing discussion I've had with the state for the last 3 years. It is lower than the amount that they had put in the budget, so they gave us some credits on some other issues that we tried to offset. And there are other things that we can go into in detail that there's a lot of puts and takes with us in the state. And then the overall scheme of things, we thought this was reasonable because they've been very accommodating on some other issues we can go into at more extensively, at your leisure or when it's convenient. But
we
in
can
light
pick it
of
up a little bit more in finance. I
Yeah,
mean, it's a formal agenda item
Sure.
in finance.
Yep,
so.
yep. So in light of all that, but again, to your point, we have made that argument and made those points, and it's not as if it's gone on deaf ears. They have indicated to us it is their goal to start bringing that number down and having it go to zero. So it's and as you know, the states went through a very difficult time during the pandemic. They are now in a much better position. They're getting more money. They got a lot of money from the federal government. In fact, this is the first year, I think, in my memory, where the controller puts out a report every year how much money New York State gets from the federal government versus what they send. This is the first year the number is in a positive, and the governor has announced that their budget should be balanced for the next 4 years. And in light of the healthy situation the state is in, I think it's completely warranted that number come down to zero.
All of which furthers the judge's, perspective or
Yes.
the philosophical
Right.
bias we all have.
Yeah, but this was already baked into a prior, a budget and a prior plan, so it was already part of their plan, and they have to meet their targets as well. But again, in the totality of things going on with us in the state, I think it's reasonable for now, but we're also reasonable to expect it to go down to zero in the future.
And it's one of those we just need to put in context. Philosophical debate. It's an easy one to embrace the judge's points of view, and I think we can talk further in
Yep.
finance. But as you just recapped, I call it a relative win in terms of navigating terms and conditions as to how we go forward. And big picture, I don't deem it adversely impactful on us, our ability to do business, our ability to fund important initiatives and projects. So
Yes.
I assume that's,
Yes,
your perspective. We're not being compromised unduly.
No, I mean, it's,
Well, philosophically, we can disagree as a practical matter.
right. So it's not, it's not impacting our results. It's already taken into account in our results so that we've fully provided for it. And it's to be used to further other state energy programs,
Right.
for which we are a part of. So as a requirement of our resolution and our making these payments, it is conditioned on the fact that they use it towards state energy programs. So there's a lot of things.
Earmarked from that standpoint.
Yes.
And that frankly goes back to even my early years with the sweep judge, because of your advocacy, among others, we're able to navigate that it wasn't just a general fund disbursement that could be used for whatever. It was to further advance other energy and energy related initiatives. So,
Yeah, which is a condition of the resolution.
but we'll come back to it. It's an
Sure.
action item in finance. So
Yes.
why don't we pick it up
Yeah.
there with the judge's perspectives duly noted we'll pick it up in finance, okay?
Sounds good.
Good, good, okay. Justin, anything else?
Paul? Oh,
We have another, if Adam's wrapped up.
you're
we have
good,
the next
Adam. I
agenda.
mean, so again, kudos to you and the team for
Thank you.
successfully navigating year end. And we probably can pivot now to
Scott?
Scott and KPMG, right?
Yep. They're up.
Good morning, everyone.
Morning.
Mr. Chairman, members of the committee and board, and NIPA management. It's nice to actually be here in person first. I think the front desk was telling me the last time at a client pre-pandemic was here 2-3 days before the panic set in. So it's nice to actually be back somewhere, a few places in person. But in terms of the audit,
Scott, hold on a minute.
We're getting a lot of feedback.
morning, Chair and members of the committee and board, NIPA management. Nice to actually continue. Okay.
With just a lot of feedback, and
Oh, I'm sorry.
we were listening to ourselves all over again as we did
That's-
earlier. So,
Well,
okay.
you don't want to listen to me more than once. So, but from we have a short presentation. Chris DeVenzo, who's our senior manager, he's been our senior manager the last 3 years. So from that standpoint, at a manager level, we've had the same team like as we communicated back in December. So that's a good thing. He will go through kind of a lot of the required and some highlights of the audit. I guess I wanted to just take maybe a few minutes, kind of where we're at, how the progress for this year, touch on some of the big things, brief, some of which Adam already alluded to with the OPEB plan. But from a status standpoint, obviously, we're targeting. We still have a healthy amount of work to clean up and get through, mainly reviews. The next week or so, the target date issue on March 29th, March 30th. But at this point, we don't have any significant issues. We're, to Adam's point, no concerns at this point. Broadly from the, like, I think just to Adam's point, just to echo, I think, this is my 3rd year because I've come back on the account as a partner. I think this year by far has been the best. Just like I know we've talked about it, and with Sandeep's team and Adam's team, just I think the interaction and timing and quality of deliverables this year, I think is, we've definitely seen an increase and improvement in that. So I think that's made our job a lot easier. And I think in all honesty, if I sit here today, I feel much better where we're at, 10 days out from the opinion than I did say, if you asked me that question a year ago, to be frank. So I want to make sure Sandeep and his team, they get credit for that because they really
Great to hear.
the effort to help us get there this year. So
Nothing better than a virtual audit, I guess. So well done, guys.
I'm hoping, I know I said it in December, I was proven wrong, but I think next year I can see it, at least in our firm, there has definitely been a push to be back in the office. So I think if NIPA is willing, I think there may be some more of the hybrid, maybe not like what it was every day, but more of the hybrid. And I think that my personal view that it allows for some better dialogue and interaction. So hopefully that's where we get to next year. But just to summarize, like big picture things, we like the OPEB plan. Obviously, I won't regurgitate what we talked about in December, but that was a big lift for everyone. We changed the dates of the plan, which required some extra efforts on the fiduciary audits. There was lots of actuary involvement. We had our national office involved with the merger of the plan, changing of discount rate, changing of assumptions. So I just wanted, there were a multitude of things and effort that were put into that to get there this year. So I don't want to discount the level of effort that management and we had to put in to get there. So, but all in all, we're comfortable with the management's accounting, and our actuary has been through everything. So from that perspective, we're comfortable. The one other thing for the committee, I think we wanted to maybe just highlight, touched on it in December. I think Adam went through a presentation with the AFDUC. The management did an assessment of that, and there is to basically, I'll say, catch up, true up some of it in an AFDUC related to the equity component, which again is regulatory concept for amounts that you're allowed to recover ultimately. So we've gone through that exercise with Sandeep and Adam and his team, and we're comfortable with the amount that they've recorded, and we've audited that. Think just wanted to bring it up again, another thing we've spent a lot of time on this year with management. Plus, when you get our final communications, which is just our standard letter, there's 2 audit differences on there. One is related to this, and it's purely just an impact of the prior year impacts that management's in essence corrected this year, and a carry forward of last year's entry. But in terms of new audit adjustments, we don't have any audit adjustments as it relates to the 2021 audit. So that's obviously a good thing at this point.
Excellent.
And then probably the last thing, I think, just how Chris will touch on it, but you
So
may.
it really didn't need you guys. You didn't find anything. I
That's-
mean, come on,
There's-
Scott, you gotta earn your keep. you
Okay,
know?
well, but if we find something, then we get,
That's all right.
we ask questions. I can show you.
Okay, okay.
I can show we've asked lots of questions. But to the committee, one thing I wanted to highlight, Chris will mention, you'll see the standard setters, the format of our standard audit report, which is just, the opinion, it's, it's pretty, I'll say it's legal wording. The format of that has changed. I think they keep everyone on their toes. Every 3 to 5 years, they change it. And a lot of it is just the order and the format of the audit opinion. It by no means changes what we do, what we did, the audit. So it may just look different if you look at it and you do the compare prior year versus current year. So I just wanted to highlight that. Chris will make mention of it in his comments.
I
But it
assume it
is-
was just to acknowledge we didn't really read the whole report anyway, so you just put the opinion right up front. So all you gotta do is read the first paragraph, and there's no reason to read the rest of it, right? It's the new approach to writing and communication anyway. If
I
you
know.
don't say it early, don't bother saying it.
Well, this is,
You don't want to bury the lead.
this
Yeah,
is the
exactly.
This is the third or fourth time they've changed the order of it in the last 20 years. So I'm sure 5 years from now, you may hear the same story again,
Right.
but all joke, but I just wanted to highlight that. That is something you may see. So we'll touch on that as well. But I mean, like I said, they were the big, obviously we beat up some other stuff, but the 2 items, they were the things that we spent a lot of time on this year. And I just wanted to make sure everyone took proper recognition for not just us, but the effort management took to get through those 2 items, because it was a heavy lift by Sandeep and his team. So, but with that, I don't have anything. I'll pause before Chris goes through the slides if there's any concerns or questions of us at this point. If not, I'll turn it over to Chris.
Thanks, Scott. So I'm gonna, like Scott said, I'm gonna walk us through the slide, some of our required communications and some of the documenting and highlighting some of the work we've done during the audit. So if you turn to slide 1, this is just a general overview of where we're at. And as Scott mentioned, we expect to be in a position to issue our reports in connection with the audit around March 29th, March 30th. As of this point in time, the open items that I would like to draw your attention to are completion of the final audit procedures, including reviews, populating the audit misstatements and our evaluation, as Scott mentioned, related to the FUDC matter, and a final tie out of the financial statements. And also, upon issuance, we will be receiving management's rep letter and legal documents. When we do complete our procedures, as mentioned, we will expect and will be issuing an independent auditor's report, a report on internal controls in accordance with government auditing standards, and our report on investment compliance, which are consistent with our deliverables in prior years. You skip ahead to slide 3. This outlines some of our required communications to you. I'll highlight a few items here. Again, echoing what Scott said, there will be an uncorrected audit misstatement related to the AFUDC matter, and we will include that in a schedule provided to you upon issuance. As far as changes in our risk assessment and planned audit strategy, we have no matters to report. Moving to the next slide. as it relates to non-compliance with laws and regulations where significant difficulties and encountered during the audit, we have no matters to report. There are no matters to report related to disagreements with management. And lastly, as it relates to independence, KPMG assessed our independence throughout the period of audit. And we will provide an update as of issuance date. We have no matters to report at this time, and KPMG has and will and continues to remain independent.
Won't be calling on for that bond issuance, Sam? I mean, I think we're gonna be tapping into them. there.
Well, we don't want to have a fire drill again like last year, so, no, hopefully not.
No, I was in the maternity room last time with my wife, so if we could avoid that, that would be appreciated.
Moving to the next slide. This slide is really just a reminder, again, about our responsibilities as it relates to internal controls. We consider internal controls in the performance of our audit, but we are not expressing an opinion on the effectiveness of internal controls. Moving to the next slide. We did identify one significant risk in connection with our audit, and that's the significant risk related to management override of controls. And I'll just note that this risk is present at all entities. Some of our audit response and findings, we did test the design and implementation and operating effectiveness of controls over manual journal entries. And that's related to journal entries during the audit period, at period end, in preparation of the financial statements, and any post-closing adjustments. And substantively, our response included examining journal entries throughout the performance of our procedures in all our audit areas and ensuring that it had appropriate supporting documentation behind each of the journal entries made. And we also reviewed accounting estimates for any bias. As it relates to management override controls and the controls and substantive procedures performed, we have no matters to report as of the year end of December 31st, 2021. Moving to the next slide. So the next couple slides will document or discuss the identification of estimates in the audit. So the first one here, and it's been mentioned by Adam and Scott, the OPEB, which is accounted for in accordance with GASB 75. So management uses a third-party expert up to determine other post-retirement obligations. As far as KPMG's procedures performed, KPMG engaged an actuary to review the authority's actuarial valuation as of December 31st, 2021, including the key assumptions. We tested census data. We tested the value of the plan assets and used a national pricing desk, which is our internal investment valuation specialist, to value those assets. And we also confirmed the balances of the assets as of period end. As it relates to OPEB, the estimate of OPEB, we have no matters to report. Moving to the next slide, and again related to OPEB, this is more of just highlighting what Adam and Scott had said previously about the changes to the OPEB plan this year. So there were three main changes, which were the combining and integration of Canal into the NIPA plan, the change in the measurement date to June 30th, and the Medicare Advantage plan that was implemented. Again, we performed procedures throughout the year related to this. So we had our actuary look at all this information, and we have no matters to report. Everything based on our actuary review and our the engagement team's review. Nothing to report to you guys on that.
So we're taking in 10 million a year for 5 years.
No, we're taking in $30 million a year for 5 years, 5.69 years. So if you take the 100 million and the 50, roughly, you'll get, and it's 5.69 years, so it's roughly $30 million a year
Got it.
for 5 years.
Yeah,
Okay.
we broke out the two changes separately. So.
Got it.
Okay, moving to the next slide. Another accounting estimate identified pensions, which is accounted for under GASB 68. NYPA participates in the New York State Pension Plan and records its pension expense, pension liability, deferred outflows, deferred inflows as a proportionate share of the state plan. KPMG's procedures involved engaging an actuary to review the assumptions of the state plan and valuation performed by the state plan. The engagement team, we recalculated pension expense based on that proportionate share. And again, no matters to report related to the pension estimate. Next estimate identified is the valuation of marketable securities. So management's process used to develop it is they record investments at fair value and mark those to market at year end. KPMG confirmed all of these investment balances as of year end. We also, similar to what we did for the plan assets for the OPEB plan, we engaged the National Pricing Desk, which is our internal valuation, to price these investments at period end. And we also perform procedures over the authorities, the Power Authority's investment compliance, ensuring that investments were in compliance with board approved policies.
What do we have that's not readily marketable where pricing is not readily determined? Nothing, right?
Nothing.
I mean, I'm,
Not on the NYPA side and not on the, very little, if anything, on the OPEB side. So it's all very straightforward. Treasuries, agencies.
so when you reference National Pricing Desk, I'm saying, do we have anything that's,
No,
atypical or unusual or not readily marketed where there's not a ready market available? So
I would say the only thing is in the OPEB plan, there's a few alternative investments, which are recorded at NAV.
okay,
So those ones are outside of the scope of National Pricing Desk, but for the most part, almost all the portfolio is just.
got it. Okay,
And we do work over those alternative investments. We get the statements from the funds and we perform test work to ensure that the value that they're reported at is appropriate.
okay.
Moving to the next slide, the last estimate we have identified is the valuation of derivatives, which again is recorded at fair value and it is accounted for under GASB 53. So KPMG confirmed the Power Authority's open positions as of December 31st, 2021. We also reconciled those open positions to the presentation on the financial statements as assets and liabilities. And we engaged a specialist to independently test the fair value using market prices at year end, which are being used to record the derivative at fair value. Again, no matters to report related to our test work over derivatives. Next couple of slides, just some of the more significant audit areas. Long-term debt, engagement team performed a roll forward of long-term debt. We confirmed long-term debt obligations, short-term obligations, and the line of credit. We tested material activities such as debt repayments during the period, and we recalculated interest expense for the 12-month period ended December 31st, 2021. No material matters to report as of December 31st related to long-term debt. Next slide, capital assets and allowance for funds used during construction, or AFUDC, which briefly mentioned before. We performed roll forwards of the construction work in progress and plant and service balances from prior year to current year. We tested material activities such as additions to of capital projects We place an emphasis on the capitalization of those and making sure that they're appropriately capitalizable. As it relates to items placed into service during the year, we ensured that they were timely transferred, validating that depreciation was starting at the correct point in time, and that the asset grouping was appropriate for those assets that were placed in service. And we also performed a substantive analytical procedure over depreciation expense for the 12-month period ended. As Scott mentioned earlier, our procedures related to AFUDC were over the 2016 to 2020 amounts that were captured this year. We tested inputs into that calculation, such as the quit balance and the AFUDC rate that was utilized. We also recalculated the total amount recorded in 2021 for those prior years. Also, we reviewed and performed procedures over the Power Authority's adoption of GASB 89, which was implemented this year, which is a presentation issue of interest capitalized during construction. And I'll touch upon that in a slide or two. Other than the AFUDC matter that's going to be presented on the uncorrected misstatement schedule, that we have no matters to report related to AFUDC or capital assets. And the last significant audit area I'll touch upon is revenue. The engagement team confirmed accounts receivables with the NISO and CNE wholesale customers as of December 31st. We performed detailed test work over the revenue transactions with CNE wholesale customers, and the New York ISO agreed invoice cash receipts for those revenue transactions. And we also performed detailed recalculations of those invoices by taking the prices charged to customers and agreeing them back to approved tariffs. No matters to report related to revenue as of December 31st, 2021. Next slide is related to newly effective accounting standards. As I just mentioned on a slide or two ago, GASB statement number 89 was adopted this year, which states that interest incurred before the end of the construction period can no longer be capitalized, but there is an exception for public utilities, which allows the recording of that. The exception states that a public utility can record it, but it can no longer record it in the asset group. It needs to be broken out separately as a regulatory asset, which the Power Authority has appropriately adopted for this year. The other two statements I'll touch upon quickly that are coming up next year: GASB statement number 87 for leases, GASB statement number 91 conduit debt obligations. Those are two that are being evaluated and will have an impact for NYPA. The others are just here for informational purposes and will be evaluated, but are not expected to have a material impact on the financial statements. And moving on to the next slide, this is related to what Scott had mentioned about the new auditor reporting standards. So in Appendix 1 to our slide deck, there is a draft of our current year auditor report, which we expect to issue at the end of the month. And just to highlight a few of the changes in that report, the opinion section is first, as we discussed. It includes statements documenting that the auditor is required to be independent of the entity. It expands on management's responsibility as it relates to going concern, as well as the auditor's responsibility for identifying conditions that are indicative of a going concern issue. Again, there's an example in the appendix that everyone could read through if they would like. Also included in the appendix is a few slides on the diversity goals of KPMG and a transparency report related to our commitment to audit quality. Those are also included for informational purposes, and if anyone takes a read through those and has any questions, we'd be happy to discuss that at another point in time. As far as our materials, that's all we have prepared, so we'd be happy to take any questions from you guys at this point in time.
Any questions for KPMG?
I mean, we'll, at the back end, have an exec session with you guys that, you know, we can just chat a little bit as a committee in a customary fashion, so we can pick it up there. But similar to my comments earlier to Adam and the team, kudos. Appreciate the effort, all levity aside. I know it's been a challenging couple of years, and I appreciate the extra efforts, not only the audit process, but the, you know, support our bond and public markets issuances and the like. So thank you very much for your good work, and you know, pleased with the outcomes, obviously.
Good. Next item, Angela.
Judge, before you move on, I think Justin and team, Lori are reminding me, we need a motion to approve the
Yes.
submission of the financial report that Adam made. So before we jump to internal audit, can we just
Yeah.
get a motion?
I'll
We
make a
had
motion. I'll make a motion, Judge.
Tony, second.
Second.
Second to be.
All in favor signify by saying aye.
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 Aye. So that's to approve the year-end report as submitted by Adam. Okay, great.
Excellent.
Thank you. Sorry, apologies, Judge.
No, I missed that on the sheet.
Angela.
Angela.
Good morning, trustees, EMC, and staff. Glad to be here this morning to give you an update on the 2022 NIPA and Canal's internal audit plan. So if we can just turn to the slide, it says 2022 audit plan status. Okay, so at this point, we have 42 projects on our plan. No changes have been made to the plan so far. We did do our quarterly review of upcoming audits for Q2 and found that what we had on scheduled out for Q2 and even looking at Q3 still was relevant to address emerging risk or risk that happening in the organization. So at this point, we have 2 audits that have been issued so far. 3 have moved into reporting, should be issued within the next week or so. We have 2 that are in field work and will be issued by the end of the month or early April. And then we are planning for 6 audits that are in progress for starting in Q2. So we're off to a good start executing the audit plan. If we can go to the next slide is related to the 2021 EH&S compliance audit plan. As you recall, the timing for cadence is April to March, so we're nearing the end of this audit plan. What the materials here say we've issued, there's 4 compliance audits in the plan altogether. The materials here say we issued 2. We actually issued another report 2 days ago. It's not reflected here. So we are on target to issue the last report by the end of March, and we're making good progress here as well. I can go. The next slide is just, we can skip over the next slide, just showing that there's no changes to our plan. If we can go to the 2021 observation summary status for NIPA and Canals. In 2021, we identified 98 observations, of which there are 36 are open. And we have 1 remaining for 2020. It's a medium rated observation. It's related to invoice processing at our sites. It's pending automation, so it's making progress to close this year by September 30th. The bar charts below here show kind of broken it out between how the observations are being closed between high, medium, and low, and then the total. So about 63% of the 2021 observations have been either closed ahead of time or on time. So this signifies, management's efforts towards risk mitigation and remediation. We have minimal observation extensions, so all observations are on track to close within 2 dates throughout 2022, and we don't have any observations that are overdue at this Next slide is just a summary of that open observation for 2020. I'm not going to go into details. The next slide after that is just the percentage breakdown between open and closed. And then we would like to talk about the observations that we've had so far for environmental health and safety compliance audits. So we have about 10 observations that are open. We identified 27 observations between the two reports so far, 10 of which were high, 17 were medium rated. We didn't have any low rated observations, but site management is already full 17 of those. There were no violations related to some laws or regulations that were of substantial risk to environmental health and safety for employees or customers, or that could lead to any legal penalties. All observations here are also on track to close within the 3 to 9 month time frame. So this is also tracking well for closure. Next, quickly is just go to the next slide quickly on our strategy. Two things I want to point out. For data analytics, we built about 3 routines last year. We're running them again this year for staff stakeholders to take a look at review data. And this is the beginnings of what the strategy is supposed to be doing in terms of execution is continuous auditing. And the more routines that we create, the more we'll run them again for managers to see if there's any outliers that they need to pay attention to. We're building 2 more routines this year. We're in the process of building 2 now. We want to get to 3 or 4 at least by the end of the year on identity access management and records retention. The other thing I'd like to point out here, just on the GRC optimization, the observation management module within the GRC system is live, is in production. So all our 2022 observations will be recorded in that module, and we'll be tracking closure in the module as well. And the next thing for 2021, anything prior to 2022 will be in SharePoint. So we decided to make a clean cut between both systems, keep SharePoint open until prior 2022 observations are closed. And then once everything's closed, we'll fully be on the observation management module within GRC. And the next slide is just the communications, required communications to the audit committee. These are standards that I have to communicate from the Institute of Internal Auditors. I won't go into details on that unless someone really wants to know about the standards. But other than that, that's my update.
Any questions for Angela?
Yeah, can I back us up here, and didn't want to break your rhythm there. So you were on a roll. So if I jump back to your 2021 summary, excuse me, just talk for a couple minutes here. One, I think it was even referenced before. It would be helpful for us. You've got 98 observations here, call them 100 observations. I'd be interested thematically, where, what you see, the root cause or systemic, issues are there, how you would frame that. So I'm not asking for instant recall here, but if you can come back to us with, something that, categorizes, the 98, the 100, and 20% was this, 25% was that. I mean, just looking for major themes in terms of where as an organization we need to focus, should focus, back to our earlier discussion in terms of relative improvement. 2, my pet peeve issue, continues to be how rapidly as an organization we respond. So if I'm interpreting the bars correctly here, so then the higher risk or higher, whatever, higher rated issues, there's 11 out of what was 19 that are still open, that are in progress with no extension. So the good news is there's no extension. The flip side is, as I sit here at the middle of March, I'm always confused as to, well, it's 75 days after the end of the year, after all this, when is all that? How, if it's high and it's higher risk and it's of major concern, I'm expecting quicker response than slower. I don't know what that means. So that's where I'm always focused on what can we do as an organization. This is an organizational issue, not an audit issue as to, okay, how quickly can we respond? How can we better close the loop? So the good news is, it says it's no extension, but that half a loaf still doesn't float my boat there. So if we can figure out how we can accelerate and deal with all of that. And this comes back to, if there's not a sense of urgency to respond, I question how it can be rated high to begin with. So it's my annual monologue, broken record, but I'm just trying to, bend the curve or break the curve if possible.
Yeah. And as you know, this has been a continuing
Yeah.
discussion. We've made great progress. I think you would agree.
Yeah.
Over the years in this category. And I think in talking to Angela, and we follow this closely, and she and I work closely together on it. Sometimes there are programmatic and exigent circumstances that come into play that just don't allow the
It's way too
organization.
intellectual, exigent, and, okay.
But I mean, there are other factors that sometimes come into play that don't allow you.
Dumb it down for me. Okay, good.
In any event, we're tracking it closely, and to the extent that we can programmatically and organizationally respond quickly, we're making every effort to accelerate that process. And again, I think we've made, some real great progress here.
Okay, so I guess then coming back to Angela and audit, I'd want to ensure that you're satisfied, and we should be comforted as a committee that there's no real risk. There's no ongoing risk, that the response to date, while a work in progress, is adequate, sufficient, and the organization isn't in harm's way. For whatever reasons you rated it at a high exposure, want to ensure you're comfortable that we're doing things on a timely basis that minimize or reduce the risk. I mean, you get where I'm coming
Yeah,
from.
no,
So
and I agree with
somehow
you.
that you can provide us with some assurances beyond in progress with no extension. It's like, okay, again, I'm always concerned that something's going to bite us in the backside. It's like, well, we told you it's higher. Well, no, this comes back to, no, want to ensure we're appropriately attentive and responsive.
I mean,
Okay.
I agree with what you're saying, and internal audit works with management very closely.
Yep.
Particularly on the highs. Every month, we're looking for, talking to them, where are you on your updates? Where are you with risk mitigation? We report that to EMC every single month. So there is a very close working relationship, so we can understand exactly how the recommendations we made for the highs are being mitigated along the way. It's not, we report every 6 months. It's where we're actively engaged. And
Well, if you can give us a little
reviewing that.
more narrative around the thematic issues and the nature of the response and where we stand, rather than just the quantitative, a little more qualitative explanation, that would be helpful. Okay, you can come back to us and or send us some, follow-up
I can put that together for you.
information.
Yeah, and as mentioned earlier, from management standpoint, we are making this a standing item on our on our executive
That's great.
risk committee, and holding everybody accountable.
Executive committee actively involved in doing this on these outliers?
Yes,
Yes.
yes, absolutely.
Okay.
And whoever's got the 1% of observations still open from 2020, let's get it cleaned up, okay? So it's just not a good look, or tell us that we're significantly complete, let's not highlight the 1% if it's not worthy of the cleanup.
Okay.
Angela,
Okay,
you
great.
got
Thanks,
the
Judge. Thanks, Angela.
next
I do have
item?
Another item to discuss. This is the environmental health and safety compliance order plan for 2022. So if you can go to the next slide, 2 slides, I believe. Yeah. Okay, so we've been working on creating the 2022 compliance audit plan. And it's basically, we're following pretty much the same process we use for our regular Canals plan. So the plan reflects a defined risk scored universe. It has about 8 entities that, in that universe, the audit projects that make the plan are based on the audit ranking of that entity, the last year audited, emerging risks. We've engaged with key stakeholders to get their input on what they see as, potential risks in this space. We've also talked to risk management and other business units. Our plan is aligned to our ESG foundational pillar, as well as our workforce health and safety top enterprise risk. We've expanded the program to include commercial operations construction program projects this year. And ultimately, we're asking the audit committee to approve the plan for 2022. Can you go to the next slide? This is basically our risk assessment process and our audit planning process. As I mentioned, it's pretty much the same as our regular plan that we present every year. Where we're getting internal inputs, looking at prior audits, open observations, looking at strategic initiatives, top enterprise risks. We're engaging our stakeholders to get their input, any EH&S requirement changes that they see coming down the pike, external inputs. We're looking at also industry regulations. We consult with a third-party vendor that is experts in EH&S auditing, and they give us insight. So that's external inputs. From there, we created the audit universe, mentioned 8 entities. And then we, based on all of this information, we create the plan. It's based also on resources that we have. And then we presented it to, we have an EH&S subcommittee. The subcommittee includes EH&S department, law, ethics and compliance, as well as utility operations to give their input on the plan as well. And then now we're presenting it to the audit committee for review as well. So that's the whole risk assessment process. If you go to the next slide. So the audit universe, I mentioned 8 entities broken down between NIPA and canals. We have 6 on the NIPA side, 2 on the canal side. The entities are categorized by type and facility, size of the facility, and the construction depth of the facilities. We use a risk model to come up with the risk scores that includes risk factors such as legal, operational, environmental, EH&S factors, facility, project size, the budget, control risk, technology. All those factors go into the model to come up with the risk scores. We've applied a cycle to this overall universe, which will be based on a 6-year cycle. So we can cover high, medium, and low entities. And that will also allow us to be able to cover the compliance of all those regulations and also internal requirements. We have our own internal policies that we have to comply with other than the regulations. So the plan has 5 projects that we're going to be auditing over 2022. 2 of them are related to a hydro generating facilities. We're going to look at Niagara and St. Lawrence. 3 are construction. So we're going to look at Niagara transmission life extension modernization project. We're going to take a look at Canal's Lockport site construction project, as well as one of the commercial operations energy efficiency projects. As I mentioned, we expanded the program to cover commercial operations. From talking to stakeholders, we did find that there are some regulations for EH&S that construction projects within our commercial operations, they do have to comply with. So that's energy efficiency, that's on the e-mobility side, as well as New York Energy Manager. So we've expanded the program there. Any questions so far? The next slide, I won't go into detail. This is just the 5 projects, what we're going to be covering and when. And then, so basically, the next step is just internal is requesting that the audit committee approve the EH&S compliance audit plan for 2022.
Any questions of Angela? If not, I ask for a motion.
So moved.
Moved and seconded.
Second.
All in favor of approving the plan? Signify by saying aye.
Aye.
Motion carries. Plan is adopted for 2022. Next item on the agenda is the consent agenda. Consists of approving the minutes. Ask for a motion to approve the consent agenda.
So moved.
So moved.
Moved and seconded. All in favor signify by saying aye. Aye.
Aye.
Aye.
Aye.
Next meeting of the audit committee is July 14, 2022. I would ask for a motion to close the audit committee meeting.
So moved.
Judge, before we close, I'd ask that we move into executive session to have our executive session with KPMG, and then we can come back out of that and close the meeting. All right?
Okay, that works, yes.
So
We have a motion to go
we
into.
can have our,
session. Yes,
great. And then we'll just come back merely to close the meeting. But
Yep,
I agree, otherwise our work of the day is completed pending our brief discussion with KPMG.
okay. Motion to go into
So
executive.
I'll make
session.
a motion that we move to executive session for
For that
dialogue with KPMG, our annual dialogue with KPMG as an audit committee. Whatever that should be officially, that's my motion.
I'll
Second.
second that.
Second, all in favor signify by saying aye. Aye.
I don't think it
Aye.
needs to be pursuant to section 105 of the Public Officers Law. It's unrelated. So,
Yeah,
okay? And then
Okay.
we'll come back in public session
close.
and we'll reconvene in public session and adjourn the meeting. We don't need anybody else to help us with that, right?
Correct.
Okay, great.
Good.
Yep. Mr. Chairman, I'm happy to make a motion to resume the meeting in open session.
Second,
Second.
Second.
all in favor signify by saying aye.
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 We're back
Aye.
in session. No votes were taken while we were in executive session. Can I entertain a motion to close the meeting?
So moved.
So moved. Second.
Moved and seconded, all in favor signify by saying aye.
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 Next meeting is July 14th, motion carries. Thank you, everyone.
Thanks very much, Judge. Thanks, everyone. Thanks, B. Thanks, Tony. Thanks very much, Judge.
Yep.